you, Lizanne. Good afternoon, everyone, and thank you for joining us on this earnings call organized to discuss the Q3 FY21 financial performance of Everest Kanto Cylinder Limited. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. Before we begin, I would like to state that some of the statements made in today's call may be forward-looking in nature. A detailed statement in this regard is available in the Q3 FY21 results presentation that has been sent out earlier. I now request Mr. Puneet Khurana to start the proceedings of this call. Over to you.
Yeah, thanks, Shiv. Good afternoon, everybody. I warmly welcome you to the Everest Kanto earnings call to discuss the operating and financial performance of the quarter ended 31st December 2020. I hope all of you are staying well and safe. I would like to start talking briefly about the background of the company for the benefit of those who are interacting for us for the first time or have been following the company recently. I will cover the Q3 FY21 financials and operating performance and the key underlying business drivers. EKC has been in the business of manufacturing seamless steel gas cylinders over the last 4 decades. In this period, we have over 20 million industrial gas and CNG cylinders in service, and we are leading manufacturers in India with aggregated capacity of 900,000 per annum. Our range of products include industrial CNG jumbo cylinders used for the storage of gases with application manufacturing of fire suppression, medical, aerospace, defense, and automobile. With India's expanding focus on largely gas-fueled economy, EKC is well poised to benefit. The country targets 15% contribution of natural gas in the primary energy mix by 2030. Several initiatives have undertaken to meet this objective by a progressive government. In addition, 2 announcements have been made recently in the Union Budget. One is the launch of the Hydrogen Energy Mission for generating hydrogen for green power for households and commercial use. And second is the 100 districts for CNG for CGDs network in the next 3 years are very positive, for the development of the company and of course the economy. Lately, we've seen a scale-up of demand for cylinder cascades from several prominent gas infrastructure companies that are now setting up CGDs. Following their participation in previous rounds of auction conducted by the government, these expansions will be executed over the next few years. To commit these timelines and the network of gas infrastructure, we expect increased demand in the CNG segment. We are already seeing a rising demand in the automobile segment as OEMs they are also scaling up the CNG vehicle production. We expect to see a large number of cars, factory-fitted petrol and CNG hybrid injection system being used in the Indian market. At the same time, we continue to support the healthcare infrastructure expansion across the country by supplying our medical oxygen cylinders for fighting against COVID. As the virus pandemic is widely prevalent in the country, is committed to structural improvement in the healthcare facility, and we will continue to support these initiatives. Currently, our plants are operating at around 90% capacity utilization, and we undertake several debottling initiatives to drive manufacturing efficiencies. We also planned an expansion for another 200,000 in phased manners, which will allow us to meet the growing demand for our products and maintain our prominent market position. At this new greenfield facility, we plan to use core manufacturing machinery available with us, thus reducing the overall capex. The estimated project cost will therefore be significantly lower to 45 crores to be financed from internal accruals. In addition, we have concluded the transaction of disinvestment of our Chinese subsidiary, and the consideration will be 105 crores. Will add to the liquidity on the balance sheet, allowing us to achieve substantial debt reduction. Coming to the financial performance, Q3 marked another period of strong performance of EKC, wherein we recorded our highest ever revenue exceeding rupees 200 crores in the India business alone with robust margins expansion. As discussed, domestic performance is running on multiple drivers, including supplies from several gas infrastructure companies, OEMs, auto OEMs, industrial usage, and healthcare sector. While our overseas operations firm up their strategy, growth initiative strength at the consolidated level is reflecting in revenue expansion of 29% year-on-year to 247 crores. EBITDA margin expansion almost 100 basis points to 19.4%. Profit before tax has increased by over 4 times to 33.7 crores. Our strong financial performance is backed by structural opportunity and our leading position as a manufacturer in high-quality seamless gas cylinders. Along with the growth, we are driving strong cash flow, and debt reduction is another key objective for us. Overall, we look forward to deliver our potential and drive value to the stakeholders. On that note, I come to an end to an opening remark. We are open to your Q&A and questions. Please.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Shah from Equitas Investments. Please go ahead. Abhishek, your line is in the talk mode. Please go ahead.
Hello.
Yes, sir. Please go ahead with your question.
Hi, Nishit here from Equitas Investments.
Yes.
Sir, I wanted to understand for our four-wheelers OEM sales, so can you quantify how much increase have we seen quarter on quarter?
I'll not be able to give you any numbers, but definitely there is an increase in the four-wheeler segment.
Okay. And sir, what I understand is that we don't supply to Maruti, right?
Right.
And Maruti, what I read is that they sold like 19,000 CNG vehicles last month. So, do we have any plans of now doing a discussion or any tie-ups with them?
So we are already in the part of their vendor list, so whenever their new model comes up or, when they require a third vendor, we are definitely, they will be, looking to us for supplies.
Okay. Understood. So now coming to this industrial segment for us, so how has the demand been and what is your outlook over there?
See, industrial segment is directly related to the economy, and we are seeing a strong growth in the economy. So industrial segment is definitely growing quite well. A lot of projects, a lot of development happening in the country. So we are definitely seeing quite a robust growth there also.
Okay. So earlier healthcare was contributing significantly. So now has that gone down and other parts have picked up?
Yes. Healthcare is still contributing a bit, but definitely, other industrial segment and automobile segment have kind of, also come back.
Okay. And sir, are you seeing incremental demand from this retrofitting of CNG?
Yes, we are. Yes. Because, now what's happening is the infrastructure is spreading nationwide. First we were restricted very much in a very few cities. So now what is happening, every month CNG stations are opening, across the country, across, regions. So there is a demand coming, from many new areas also now.
So sir, can you please quantify over here how much growth or in terms of quantity, how has this been?
I'll not be able to give you any numbers, but, this is a kind of a nationwide phenomena. So, definitely there is a growth. And what's happening is another factor is that the petrol prices, if you see, are at all-time high. So that is also, wherever CNG is available, all I can tell you is that there is a requirement, for people to convert vehicles.
Will that be higher margin for us versus supplying to OEMs directly?
Yes.
And sir, I wanted to understand our performance of subsidiaries. So what is the outlook over there? For Dubai, are the current numbers sustainable? And for USA, do you feel that there will be a turnaround?
The order book in the US is very good, but because the COVID situation has hit our international business quite badly. So Dubai also is, consolidating every month, and I think if you keep doing well from now onwards, hopefully it'll be much better than this quarter. So I think it should be better. Business even in the US and Dubai should be better going forward.
Okay. And so my last question is, I wanted to understand, because of this container and freight issues, are we facing any issues for our import of raw materials and export of our finished goods, or we are not affected much?
We are impacted. We are impacted by the by slowing down of this the freights and other things. But what's happening is that because our raw material is being ordered quite in time, and and we always because this is imported, so we always keep a large, say 3 to 4 months of schedule with the suppliers. So now what's happening is I'm just trying to prepone my shipments because of the disturbed issue with the vessels.
Okay.
So we have, because ours is there's always something going on with the, with the suppliers, and something in the sea and something at our plant. So what we are doing is we are just preponing our supplies so nothing gets disrupted. So we have not faced any disruption because, we have just asked for more material to come. Whenever there is any, when we feel that there's going to be any shortage of vessels availability.
Okay, understood, sir. Thank you. I'll come back in the.
Thank you. We'll move on to the next question. That is on the line of Keshav Garg from Counter Cyclical Investments Private Limited. Please go ahead.
Sir, first of all, many congratulations for excellent numbers. And sir, now we only hope that these numbers are sustainable, sir, because in a standalone basis, we did 25% operating margins, and now steel prices are also at multi-year high. And sir, so do you think that these margins are sustainable? And these numbers, the profit after tax that we did in Q3?
I think it should be quite sustainable, yes.
Okay, sir. And sir, this margin also, you think that it should sustain?
Yes. I think the margin also should sustain, yes.
And so raw material price is not an issue for us?
Yeah, raw material price is of course always an issue, but what has happened is we are in a position to pass it on to the customer.
Okay.
So, so we don't usually have an issue with that.
Sir, and also your investor presentation mentions that you're already at 90% utilization. And your greenfield plant will come on stream in FY24. So then in the interim, in next 2 years, how does the company grow then?
So, our debottling will allow us to at least, probably grow to 15% more in India.
Okay, sir.
So we'll be able to at least manage some of the growth right now, and then we will, take up this initiative of expansion.
Sir, and from change in product mix also, can we expect some increase in turnover?
What do you mean? Change of product mix in what way?
Yes.
Sir, so
if we are product mix will ensure that we have a higher turnover.
Okay, great, sir. And sir, also, sir, last Concall you mentioned that you were operating at 2 shifts. Sir, so are there any plans to start working in 3 shifts, and is it even possible?
No, we are working in 3 shifts.
Okay, so you are working in 3 shifts now?
Yeah. But the plant is working 24 hours. So it all depends on which plant we're talking about. The plants work 24 hours. Our plants work 24 hours.
Okay, so that's very great. And so lastly, sir, our consolidated, since FY16, there is a decline. It's not just about COVID in our Hungary, USA, Dubai operations. In the past 4 years, there has been a consistent decline. So it predates COVID. And also, so if you see the inventory, consolidated inventory, 3 times standalone inventory. So any plans to reduce that?
Yeah, of course. See, we are definitely looking at that all the time. And it's a concern for us. So we are definitely working on reducing inventory, across the company, wherever it's not piled up. But, our inventory, the only thing is that, our material doesn't deteriorate so quickly. So it can be used even after 2 years or 3 years. So that's not an issue, but definitely having a larger inventory is a problem for us. And we are continuously, monitoring and trying to reduce the inventory.
Okay, sir. And lastly, sir, since now we have got finally the proceeds from China, it's expected in this quarter, Q4. Sir, so our balance sheet is totally deleveraged. I think we might end the year with below or around 100 crore of consolidated debt. So are there any plans to do a share buyback?
No, I don't know. I can comment on any share buyback, but no, I don't think there's any plan for that kind of activity. But I don't think there's any plan for that kind of activity. Share buyback our shares.
So at least a dividend the shareholders deserve after a long time.
Of course. Yeah. Even I'm a shareholder. But the only thing is that these are matters at the board level. And we will definitely put up your suggestion to the board and see if they what they feel about about this dividend policy.
Okay, so great, sir. Best of luck. Thank you.
Thank you so much. Thank you.
Thank you. The next question is from the line of Rajesh Agarwal from Money or Investment Advisors. Please go ahead.
Sir, my question is on US. In spite of the order book and all, why we are not able to execute? Why the US is not turning around? First question.
The thing is that we are, there is a lot of delay in the pickup of the orders that we have. We have a lot of orders from defense and other applications. So there is a little slowdown of pickup of those orders. Maybe they delay in some mega projects. So we are a little delayed there. So that is the reason why the pickup is a little disturbed. So I think COVID situation has just made it situation little.
Is the orders delayed or the execution is delayed?
The orders. So what is the orders are available, but and we are in the position to execute. But the thing is that the customer has kind of not picked up material which has been already made for him. So that is where we are stuck now.
Sir, at what turnover US will break even? Suppose we are doing this quarter 24-25 crore turnover. At 45-50 crore US will break even?
Sanjeev, can you just add it?
That will be even at 20 million USD, when we'll be at break even. 18 to 20, 18. Even 18 it will be break even. 18 million USD for a year.
For the year, you will break even. Okay. And so the second question is on Dubai. There may be no on-out because of subsidiary sale. So what is the status of Dubai order and all?
So Dubai orders are, picking up, and hopefully, in coming quarters we should see some much better traction from there.
Okay. It is export orders to Egypt and all, no?
Yeah, export to South America, export to Europe, export to Egypt. Dubai is mainly from export only.
Okay. So Dubai, you are expecting Dubai to pick up?
Yeah, for sure.
Okay.
For sure.
And third question, sir, CapEx which we announced, 45 crores, that can give us what top line?
Sanjeev, do we have the numbers for that, or we are able to?
I said 200,000 would give us on average, it will be around 200 crores.
200 crores. And we can maintain the same EBITDA margins, what we are maintaining now in that order?
See, as time, obviously, initially, because there will be a pickup in the plant.
Okay.
So EBITDA margins will obviously reach to this level. So it will not be on the initial startup.
Okay.
Reach to this level.
So it will be in phases?
Yeah, obviously. Yes.
Okay. And so how has been the working capital this quarter, or working capital requirement?
No, we have been able to control our working capital requirements, and we are well within our limits. We are not absorbing the full limits also. Okay. Number of days has reduced compared to last quarter because now it's a sellers market. Yeah, I'm sure. Yes, they are reduced. They have reduced. Okay. Thank you, sir. Thank you.
Thank you. We'll move on to the next question. That is on the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, good afternoon, sir, and congrats for a good set of numbers.
Thank you.
I had a few questions. One was regarding this expansion that you announced in India, wherein the release mentioned that it will be FY24 when the first phase will be commissioned.
Right.
So this 200 of, so first of all, since it's a brownfield expansion, isn't 3 years looking like a very long time frame for this one? And secondly, when you say first phase, 45 crores and 200,000 itself is the first phase, or When you say 45 crores and 200,000, there are 2-3 phases in this.
No. So 200,000 will be the first phase, and this is the only expansion planned right now for us. Yeah.
And so why does it take like 3 years for a brownfield expansion?
I don't know, 3 years, at least, I think, Sanjeev, are we talking about 3 years?
No, it's not 3 years. See, I mean, it's like when you start, it's be closer to 2 years by the time the full production capacity is achieved. So it will spill over 2 years, following years.
Yeah.
It will spill over to the following year. That's why the year looks as if it's 3, but it's only 2.
Okay.
Sure. Secondly, if you could share with us the figures of the net debt as on December quarter on both standalone as well as consolidated basis.
Yes, Sanjeev. The net debt, the long term you're talking about?
Both combined, long term plus short term, as on December 31st, net debt, both standalone and consolidated.
Yeah.
So on a standalone basis, my debt is total is including loan from promoters. It's 194 to outsiders as on December on a console basis.
Okay, and I mean, this is net of cash in the balance sheet?
Pardon me?
Is this net of the cash that is there in the balance sheet? Is gross or this is the net debt figure?
No, it's a gross.
And what would be the net debt? How much cash would be there? Sir?
So cash would be around. We are comfortable in our cash.
Okay, not a very large number basically.
No, I mean numbers. I think you can talk to us separately for such numbers.
Sure. And so from what I understand from the release, this China money, part will come to India and part will go to Dubai. So if you go, from what India money can definitely go to reduce. In terms of the money which will go into Dubai, will it be the one which will be used for expansion into Hungary, or that you will be able to remit back to India and reduce debt? How will this?
No. So that money will be first. We will be reducing debt in Dubai. Also, they are holding some debt. So the first thing they will be reducing their debt.
Okay. How much is the debt in Dubai, sir?
I think about 30 crores.
No, they will be reducing 30. They have total 56 crores of debt as of December.
Okay. So the money in Dubai will basically go towards reducing the debt in Dubai.
Yeah.
And in Dubai, what would be the utilization levels currently? In India, it's around 90%. Dubai would be working at what type of utilizations?
They are working at much lower utilization. I think, Sanjeev, what is it, around 50%?
It's around 50-55%.
Yeah.
So as the utilization picks up in Dubai, say once we reach 80-90%, what type of margins Dubai can Dubai achieve like a 40-50% EBITDA margin?
No, much more margin they can achieve.
Oh.
Because Dubai doesn't have any tax system, so they can definitely achieve better margins.
Okay. So what is your policy whenever they start making profits? Can we repatriate the entire profit as dividend or something like that?
Yeah, sure. I mean, that is again something that the policy can be looked at that time for sure. If they start making profits, we can. Why not?
Sure. And just one last question. There is this mention regarding this Hungary thing. Because normally again, see this Europe is a high cost economy. So if you could just tell, because we are already struggling with, we're struggling with China, we exited. Then USA also we are struggling. So at this point of time, what is the rationale of again looking at a new investment?
See, at this moment, we see an opportunity, and this is right now very nascent stage of discussion. So the board has just given us an approval for evaluation of the opportunity. So the rationale is there, but we will definitely give a more detailed reply once we get a complete evaluation done and study done. So then we'll be in a better position to kind of give you a proper reply on this.
Sure. But is there any...
We are still in very nascent and evaluation stage at this moment. Sorry, you were saying something.
Yeah, is there a minimum IRR or payback period that we will look beyond which we will not commit to?
No, the shorter the better. Shorter the better. So definitely, I mean, I think 3-4 years is something that we should look when we are this kind of business. I mean, if we can do that, that again, numbers can be, more clear once we put them together and we clearly understand. See, so that's why we are very nascent stage, right now to give you clear picture on this. We are still in studying the same thing. So,
sure. Thank you very much, and wish you all.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi. Thanks for the opportunity. I'm new to the company, so my question may be a little basic. First one, I'm just trying to understand the number you just said, that in the US, how much revenue are we getting, and why is it taking so long for us to, get to the break-even point?
So, the problem we are facing in the US is because of COVID. Lots of the orders that we have and lots of the work that we've already done has been, kind of stopped by the customer. So the pickup from the customer has kind of stopped in some of the orders. So that's why we are facing a little bit of a problem on, getting the numbers.
I see.
Okay. Yeah. So the order book is good. I have a big order book. I have everything there. But the problem is that the pickup from the customer is slowed down.
I see. Okay. Yeah. And my second question is on the industry side. There is a lot of talk about this compressed biogas station coming up. So I'm curious, what is your view on that?
I think this is very positive for us, because all this biogas has to be stored and transported in the form of CNG.
Correct.
So definitely it is definitely very positive. We do supply, some products in the biogas space also.
Mm-hmm.
So, this is being talked about a lot, but, I haven't seen, there is some development happening, but not at that pace that I have been hearing about. So, that I don't consider much of biogas as a major segment in our business. Yes, it's a small segment, and we are I'm also taking it as a very small. Yes, whatever comes, it's very good, but I'm not, it's not something that I'm, going to be basing my business case on.
I see.
Yeah.
So what I'm hearing is that it's not to a point where you can start putting up a new facility.
Yes. No. Definitely not. I think we are still, biogas is a long way to go. I think it's, it started. There is a lot of activity happening, but no, I would not make any business projections or give my team any projection on biogas, if you ask me.
Okay. Yeah. And what has to happen before you start thinking about that?
Say, biogas has to, the complete infrastructure, a lot of biogas plants have to come up, so it's still happening, but, not at that pace. That there was a lot of talk about it. A lot of government support is there a lot in biogas, but, it has not picked up. I don't know. I haven't seen much of biogas plants, like the way they have been talking, but not so many plants have come up.
Okay. And what is our current capacity utilization? I'm sorry if you answered that already.
In India?
Yes.
In India, we are about 90%.
Okay. All right. Understood.
Thank you. The next question is from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, good afternoon, sir, and thank you for taking my question. So my question relates to your Dubai operation. If I see your segmental result, the profitability in Dubai is quite high this time.
Right. Okay.
Is there anything extraordinary or it's a regular business operation?
Yeah, sir, it's on account of my China subsidiary being sold. The profit has come on that, sir.
Okay. Because of that, that got added in the segmental result.
Yeah.
And second thing, how we are seeing the demand in Dubai, means which country we are getting orders and all.
Dubai is catering mainly to Europe and Middle East, Europe and Egypt and South America. So there's a little bit of demand coming from Europe and something coming from Egypt. So there's a bit of demand. So actually internationally, the COVID situation is not has really hit businesses very badly.
Yeah.
India is a little different story, where businesses are doing quite reasonably well, but international businesses are very badly affected, by COVID, everywhere. So that's why, because Dubai and US is completely dependent on, businesses there, so they have been quite affected.
Yeah. No, I was thinking like you are thinking of expansion in Hungary.
Right.
Must be seeing good demand in European side.
The European market definitely has huge demand, and what's happening is a lot of government. I mean, this is again, we are at very initial stage of the study, so there is the board has been. We have informed the board that this is what we would like to do as expansion, but they have told that you kindly evaluate the project, and we will take probably a better decision once we are clear on what because your concerns are exactly the same concerns like our concerns is exactly the same concern we have. We definitely will take a much informed decision once we are ready with all the details in place.
Yeah, I agree. I appreciate it. My point was that we got some extra capacity in Dubai.
Right.
There is you are thinking of you must be seeing some good demand. That's why you are thinking of expansion. So that can be easily met from Dubai.
Right. So I think the thing is that because ours is a safety product. So lots of countries are quite conservative about importing these kind of products.
Okay.
So Europe also they are having some policy changes where these gas cylinders maybe they will probably have some policy change. So that's why I told you this is very initial. So we would like so that's why let us come back to you on a complete detailed plan on of this project.
No, sir. I appreciate that. Another thing is about the US market. We are seeing some stagnancy at lower level for quite a few quarters. Are you seeing any green shoots on that side or some positive development happening?
The thing from the US, a lot of positive development. Like I said, we have a good order book. Now the thing is that everything is going. All these order books are going slowed down.
Okay.
Now this is this is where we are. So the order book is not a problem. The problem is that the customer should pick up the order book.
Yeah.
So lots of the material is ready, but the customer is not picking up. So I maybe this COVID situation or government policy or things like that have slowed down the project. But once all this is behind us, then we definitely we will start seeing the numbers again. So I believe so again the order book is there. There's no issue that we don't have business, because see, this US business has been with this. This business itself is a 100-year-old company.
Yeah, true.
And we have been making good reasonable profits here. When we bought the company also, the company was making good $7-8 million profit. So the business is so the company will be able to do business in the US, no problem. But there is this, now we are facing this kind of sudden slowdown.
Yeah.
So we believe that maybe it's a matter of few maybe 1 quarter, 2 quarter, and then we will again start seeing that the business will suddenly start coming up.
Okay, great, sir. All the best. Thank you very much.
Thank you so much. Thank you.
Thank you. We'll move on to the next question. That is the line of Anil Kumar Sharma, an investor. Go ahead.
Good afternoon, sir. First of all, congrats for very good numbers.
Thank you, sir. Thank you.
First is, sir, we are planning for when do you think our company will be debt free? And number two, though this is your personal decision, I have invested in your company for a very long time. And Elder Khurana sir was in charge. He used to purchase from the market by shares. This is your personal decision. And the rate was at any 80 rupees, it may be 10 rupees. For the last 3-4 quarters, the company is doing very well, but promoters have not shown the interest. This is your personal matter. So I remember the Elder Khurana and paid tribute to him up. So I hope when you want to make it free, and when you say this year we can expect dividends, sir?
Again, dividend definitely. Your suggestion. Also, the earlier investor had requested for dividend, and definitely we'll put up this request to the board, and I hope they are also come forward and allow us to give dividend. So it all depends on the board how how they perceive the the situation of the business and give dividend. On the debt, I think as per long-term debt is concerned, India is almost, we are in India debt-free. We will be paying our long-term debt anytime. We have some small agreements in place that are taking place, but I think long-term debt should be complete anytime soon.
Right, sir. Sir, one more question I have.
Yes.
Regarding this 100 cities you are telling that they are coming, how we are getting the business from there?
So what happens is that the CGD, the gas distribution companies,
yes, sir.
So this was a part of the government plan already, to cover up these large they are just trying to, prepone the plan. So these were all in the plan. Already we are seeing a lot of, activity on the ground as per CNG stations coming, a lot of activity on, lot of cities getting covered by natural gas distribution. So the government has actually just preponed the plan. The plans were always there, but the government is pushing more and more, towards gas economy. That is the only thing.
What business we are getting from there?
So what is going to happen is that as soon as these more and more cities get covered under the CNG infrastructure, so more and more stations will come up. More stations come up, the more opportunity for us to sell CNG cylinders to all the vehicles that are getting converted into CNG.
Okay, right.
And also what will happen is, this will drive the cycle of, we are also providing equipment on the CNG stations. We are also providing CNG for automobile customers. So, all these things will drive the demand for all the three segments, all three CNG segments.
Right. Okay, sir. Right.
Yeah.
So again, happiest congrats for the good number.
Thank you, sir. Thank you, sir.
Thank you.
Thank you.
Mr. Sharma, are you done with the question?
Yes, sir. Yes, madam. Thank you.
Thank you. The next question is on the line of Aditya Srimankar from Ishti Advisors LLP. Please go ahead.
Hi, can you hear me?
Yes.
Yeah. Hi. Can I, my question is, can you give us a breakup of the sales in terms of percentage for CNG, industrial, medical, and hydrogen cylinders?
So what I can tell you is, we break it up into two segments, industrial and CNG. So you could say they're at about 60-40. CNG would be at 60%, industrial would be at 40%. Because my industrial is very, very large. I service. We service what you call your fire industry, your industrial gas manufacturers. So the segment is quite large. So it's very difficult for us to sit and break up all of them.
Mm-hmm.
Yeah.
Okay.
So we just categorize them in two.
And how has this breakup, moved over the last 5 years? Has CNG always been at 60%? And
CNG has been growing faster, of course. CNG has been growing faster. But if you see, what is happening is also my top line has been growing. So you can see that that we have been growing. It's growing together. Both the segments have been growing together. So last year I could say that it would have been around at 50-50.
Okay.
But CNG is slowly taking over because, of course, CNG is a segment that can grow much faster than industrial segment. Industrial segment is a very it all depends on economy and things like that. So industrial always grows at a very decent pace. But we are, you see that the traction. If you're tracking the company for the last 4 years, you can see for yourself how the top line has been moving up. So so both these segments are at a growth stage, both of them.
Okay. And what would what would the split be maybe in 2017, say about 5 years back, for industrial versus CNG?
17, I think it would be around 50-50.
Okay, even then, all right. So this is the first time that we are seeing CNG sort of coming ahead of industrial.
Yes.
Okay.
Yes.
And my next question is, what is your view on hydrogen as an automobile fuel, and how do you think EKC can benefit from this?
See, hydrogen is definitely a future because it is all the natural gas infrastructure that we see is going to move to hydrogen in the future. But hydrogen is a very expensive infrastructure, and a lot of regulatory framework needs to be in place. A lot of things happen because a lot of countries like China and Europe have already started talking a lot about hydrogen. So it's a government policy has to be in place where, so I would say the government has just started to talk about it today.
Okay.
If you recall, CNG also, we have been talking, we started talking about CNG in the 90s. So it has taken this industry around, 20 years to find some maturity. And CNG, I can tell you, is fairly very simple compared to hydrogen. Hydrogen is quite a complicated,
Got it.
So, it will take its time, definitely, because everybody wants a zero pollution fuel. Hydrogen is a zero pollution fuel, but it has definitely got its challenges.
Okay.
Yeah.
And how can EKC, benefit
so
from
again,
this?
we are only, as we are making cylinders for CNG, we will continue to make cylinders for hydrogen. So this is the only way we can benefit, in the hydrogen space.
Okay.
Yeah.
What would your, percentage, or what would your number of unit volume be for hydrogen cylinders as of last year or this year?
No, very little.
Okay.
I had the numbers not even in percentage, so I can't even give you that. Our sale in hydrogen is for completely different application. We are not selling anything in the hydrogen automobile space today.
Okay.
Our hydrogen sale is mainly for hydrogen that is being used for, industry.
Okay. What industries would they be right now?
Like Vanaspati industry,
okay,
and other chemical plants.
Okay.
So that is the kind of application we're using for hydrogen. Our hydrogen for automobile is all nothing. No, we don't sell anything in hydrogen. Maybe from our US plant, maybe they are selling something for automobile for hydrogen. But in India, we do nothing. We do nothing for hydrogen in India at the moment for automobile segment.
Okay.
Yeah.
All right. Okay, that's fine. Thank you.
Thank you.
Appreciate it.
Thank you. The next question is on the line of Bhavik Shah from MK Ventures. Please go ahead.
Hello, sir. Just a follow-up question. Wanted to get clarity on the debt part.
Yeah.
So what is the consolidated debt number you told, like the total debt?
Sanjeev, what is our consolidated debt number?
Hello?
Yeah, Sanjeev. Okay, I can give you that number. 1 second.
Sorry, hello.
Yeah.
So I'd given a figure of 190 crores to outsiders.
Yes, so now the 194 you told is from the outsiders, right? So is there any insider debt also?
No, insider means the promoter. There's a promoter debt. Another 55 crores to making a total of 245 crores.
Okay. And so, what will be the split of this, long term and short term?
My term loans as of now are only outstanding of 27 crores.
Okay. And so, have we repaid any amount of debt from the proceeds we received?
Proceeds we?
Received from China subsidiary?
No, China subsidiary proceeds are yet to be received.
Okay. Right. So we haven't repaid anything. This is the.
No, we have repaid out of our own internal accruals.
Okay. Yes, sir. And so, can you give any guidance for FY22, like revenue guidance and EBITDA guidance?
I think guidance is not appropriate as of this juncture.
Oh, okay. Yeah. Thank you so much.
Thank you. The next question is from the line of Jehen Bahada from Nirmal Bang. Please go ahead.
Yeah, thank you for the opportunity, sir. So my first question is, the new capacity will be coming up sometime in FY24. And you said that via debottlenecking, you can increase the existing capacity by about 15-odd%. So over the next couple of years, you mean to say that suppose if today we are selling 100 units, we will be able to sell 115 units. That's right, right?
Right, correct.
So probably, sir, FY22 we would be having around 10-15% kind of growth, but then FY23 growth could be capped, right?
Correct.
Okay. And in terms of industry structure for cylinders, when you say you have 50% market share, do you mean just CNG part, or is LPG also included?
No, we don't manufacture LPG cylinders at all.
Okay.
Yeah, we don't manufacture LPG at all. So yes, I include industrial also in that. Yes. So high pressure gas cylinder. See, high pressure gas cylinder industry.
Okay.
That's where we categorize ourselves.
Right. Okay. So who are the other players if you have 50% market share, and has any player entered this market over last 10 years?
Oh, no, yeah. A lot of, I think all the players that have come have now been in the last 10 years only. So there are companies called FJM cylinder, there's JFE cylinder, there is Euro cylinder, there is Rama cylinder, there is I think these are the number, and there might be 2-3 small ones also.
Okay. So totally there would be how many, sir? Approximately.
In India, I think at least there must be 8 to 10 manufacturers.
Okay. And is it like concentrated, like you have 50%, then number 2, number 3 players would be large, or they would all the remaining are small?
They would be fairly small.
Okay.
Yeah.
Got it.
Right.
Okay, fine. Thank you, sir. That's all.
Thank you.
Thank you. The next question is on the line of Anurag Patil from Roha Group. Please go ahead.
Thank you for the opportunity. Sir, do you see any threat from the polymer composite cylinders in CNG segment?
Not really. What's happening is the polymer cylinders are very expensive. So what's happening is the country, in India, we are still predominantly very comfortable and have been using steel cylinders, which are, very cost effective. So polymer definitely is something that will happen in the future, but we don't see, because in the automobile segment also today also we can offer polymer cylinders, but our customers are not very, very forthcoming where they want to have a large fleet on the these composite cylinders. So definitely something in the future they might come up, but again, all European countries also, lots of them still depend on steel. So steel, China is also dependent mainly on steel. So steel seems to be the economical and just a cost effective solution in countries like India, and of course US has adopted Type 4 and composite cylinders quite well, because again they can afford, because their bus costs, their economy is much ahead of our economy. So I think there is some time where the composite cylinders are going to come.
So sir, what would be the cost or price difference typically?
At least 5 times. I think at least 5 times of existing steel cylinder would be the cost of a composite cylinder.
Okay.
Yeah.
And sir, if we have to manufacture in future these composite cylinders, do we have the technology for that?
Yeah. We have the technology. We have the technology, not a problem. Investment also is not very large. So we don't feel that we cannot manufacture, but the market should be there. See, the market is not there for us to put in a full-fledged facility to manufacture these cylinders. So I think once the market is coming, then we can, look into all these products. Because, we are a large-scale manufacturer for products, so we cannot, possibly set up a facility and then, look for some small there is a small quantity of in the market today, but it is not, yet feasible to set up a facility.
Okay, sir. Understood. And second question, I joined a little late, or it might be repetitive, so pardon me for that.
No problem.
Any commodity price impact on the margins side in the near term?
So we are able to forward, the steel prices to the customers. So we don't find any kind of impact. And also what happens is that, because our product is fully imported, that, the dollar also has kind of, come down. So, I think the total impact, will be very comfortable today for the customer also to absorb and us to forward. So, I don't see that it is going to, and our product is a little different than the normal steel prices, because, our product is anyway value-added product for our suppliers. So our price increases are not, to the range of 50%. No. We usually our price range is from 10 to 12 to 15%. So, I think it's we are quite comfortable to pass it on to the customers.
Okay, sir. That's all from my side. Thank you very much.
Thank you.
Thank you. The next question is on the line of C.K. Bhartiya, an investor. Please go ahead.
Yeah. Good afternoon, sir. Thanks for the opportunity.
I just want to understand that while we made some money in Dubai and lost some money in US, but in total, we have made money in our subsidiary companies. So why our consolidated profit is lower than the standalone profit by 10 crores? Sanjeev, can you put some input on this?
No, see, I mean, the standalone profit, when you do consolidation, the intercompany gets eliminated. Plus, I mean, if there's a negative loss which they have done, that will be offset against our profit.
See, but while we say that we made a profit of 11 crores in Dubai, lost 5 crores in US and Hungary, in net we made some 6 crore rupees profit in Dubai and US. So our profit and consolidated should have been more by this amount. Then why this is so that our profit is less by 10 crores in consolidated? That is what I wanted to know.
No, I think you're not getting the moot point here. One of the subsidiaries is not getting consolidated. So the profit is getting distributed of that subsidiary into Dubai as well as this. So on a standalone basis, each balance sheet will be different. And when you consolidate, the effect is different.
Does it mean that any of the subsidiary which is not consolidated here is making loss?
We have booked profit on that, sale of that subsidiary.
Okay. It is anyway. That's all from my side. Thank you. Thank you. Thank you.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Yeah, so just one clarification on the segmental numbers, wherein you mentioned that the segmental numbers include the profit from sale of subsidiary. So if we understand that, you have booked roughly around 29 crores as the one-time gain?
Yes.
Of that, I think 5 crores you have booked in India and around 25 crores you have booked in Dubai?
Hey, Dubai also had to make certain provisions.
Yeah, so because otherwise what is happening is that when we see the number, what you clarified, and if we remove 25 crores as the profit from 12 crores, then you are getting a 13 crores loss, which looks like a huge loss on turn of 28 crores adjusted for the profit.
I think I can separately, give you the numbers how it gets arrived.
Okay.
Yeah.
And so the income you shown 29 crores as one time. So this expense of Dubai are booked in the console under what other expenses, sir, or where exactly under which line?
I think I'll give you the breakup how it gets offset with each other. Yeah.
And just one follow up on previous query on these composite cylinders. So you mentioned, sir, that the price is roughly 5 times. So what is the benefit but of paying this 5 times price?
Composite only advantage is the lightweight.
Okay.
So what happens is that right now when you use steel cylinder, it's heavier.
Okay.
So composite is lighter. So that the benefit of composite only lighter. It does not give you any other benefit as such.
Okay. Because in one of the industry players, Time Technoplast, in the calls have been mentioning that eventually composite will replace that even in India, and there are quite a few benefits in terms of faster payback time and all that. So that's why I think there's some confusion in the in the market regarding.
I think the Techno Time Plus, if I'm not mistaken, I don't know. If I'm not mistaken, they are making those LPG cylinders.
Mm-hmm.
So LPG cylinder, yes, there may be some. It might be a different calculation.
Okay. Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah, just a question on the provisions that you referenced that you have made in the Dubai subsidiary. Can you please provide some more color on that?
Sorry. Can you repeat the question? Sorry, what?
Yeah.
Are you talking about the provisions?
Yeah, you said you made some provisions in the Dubai subsidiary.
Right.
So I'm just asking.
Sanjeev, can you put some light on this?
So it's like on an individual basis that balance sheet had to have some loss. So that's what this particular transaction I will better explain if you individually call me up and I could explain it to you.
Okay. My other question is that what is our competitive advantage to be producing and selling in the US? If you can just Give me some color.
Reducing and selling means I'm not able to understand.
No, you have a plant there. You're producing your cylinders over there, and then you're selling in that local market, right? So I'm just trying to understand what is our competitive advantage? Do we have a large market share?
Okay. So in the US, what's happening is they are supplying a lot to the government many government agencies, and also to many gas companies for specific products, which are approved by them only. So this is their competitive advantage, So that is why they are able to, have a little higher margin and have that market.
And what is our market share there?
Oh, their market share must be, maybe in some product is almost there's no supplier.
Right. No, but overall, let's say the way you are describing in the high pressure.
US, there are only, I think, another manufacturer. There are only 2 manufacturers for this product in the US.
Okay. So we have a
good market. Quite high. Yeah, we have a good market share. Yes, correct.
Okay. And then in the UAE, what is the competitive scenario there?
UAE advantage is that the location, of course, gives a big advantage to them. And the idea was because, of course, when you are exporting fully, then, we do not need to be in India because we are 100% export. And a lot of customers would, prefer the product coming from the Middle East. When you're supplying in the Middle East, they prefer using the product in the Middle East. So that was really the competitive advantage where to go to Dubai.
Mm-hmm. Okay. And what is your capacity utilization in Dubai and in the US?
At the moment, 50% in Dubai. But Sanjeev, what is the capacity utilization in the US?
US around 40%.
Okay. So it's 90% here, 40% there, and 50% in Dubai, right?
Yeah. Yes.
Right.
Okay. And in the fiscal year 23, are you suggesting that you will not have growth because your plant, your capacity expansion will not be ready by then?
No. See, I still have some room to grow. Definitely, there is some room for us to grow, and we are also continuously debottling. So definitely, there will be some growth.
Mm-hmm. Okay. And this expansion, are you going to fund it through internal accruals, or will you raise equity for that?
No, all internal at this moment. All internal.
Okay, wonderful. All the best. Thank you so much.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Rajkumar Goenka, an investor. Please go ahead.
Hi, sir. Good afternoon.
Afternoon.
Yeah, I have got a couple of questions. So in the last call, I think we heard from the management that the expectation for the India business is to grow at about 15%. So, and what I heard from the management today, is it fair to assume that the India business, which in this quarter has done about 200 crores of top line, is expected to grow at about 15% for the next 2 years at least, till the time the capacity expansion kicks in maybe sometimes in FY24, and then we can maybe expect a slightly higher growth. Is that the right way to look at it?
Yeah. I think so. Yeah, you can. That can be some idea. Yes, can give you some idea.
Okay. And one question was that this inventory which you are carrying on in US, you spoke about the orders and you spoke about it not getting lifted by the customers who have placed the orders on you. So what would happen and how long will you wait for it? Because if you look at the September numbers, your September balance sheet which was published, the inventory on a consolidated basis minus the standalone inventory in India, the consolidated inventory was close to about 180 crores. I'm hoping that a good part of it is in US as well. So, so I mean, my question to the management, to you, sir, is that suppose if the end customers in US continue to, for whatsoever reason, for this obvious reason of COVID, and they ultimately shelve the project for which they have ordered or whatever, how long are you going to wait for it? And what happens to the inventory in that case? Can it be reused? Are the products which are ready, or is it like inventory which you can use for other customers? Can there be a potential?
See, there will be some products which are ready. We definitely, if it was some other product, if it was some other customer, we would not be trying to keep them. We would just try to, immediately sell them out. Because, there's no point in inventory keeping unless, just a delay. So definitely these are very specific material bought for specific customers. So definitely this is going to, it is on, our US business works only on order business. It's a complete, that is the way this company works, the US company. So it is all on order. Nothing is, they don't have any standard products as such. So definitely inventory has been bought for the orders, and we need to push it to those orders only. And obviously any other opportunity comes up, if any other customer, some other customer comes up who have a similar requirement, definitely, we will definitely sell it to them. But if your question is that if I can bring this inventory to India and try to liquidate it, that we will have to see what, I will have to look into that inventory and see if anything can be liquidated in India. But most likely this can be only used in the US.
Okay, but you don't have any kind of a penalty clause on the customers who have placed the order and are not lifting, because you are effectively having a cost on running the inventory.
Yeah, exactly. So we are continuously following up with those customers, but see, these are relationships span over a lot of years, of 30, 40 years relationships. So most of these orders are by government, like say US defense. So usually they shouldn't fail you, on that. We are on a continuous basis following up with these customers to, to pick up this inventory. But maybe, the customer has been probably stuck in a bigger project where the bigger project is held up. So, the delays are happening. This is all because all is project business. So, it does affect, and it is continuous initiative. Our initiative is there continuously, to ask the customers to pick up the inventory.
Okay. And one last question from my side, sir, is thank you for the answer. And my last question is that you speak about this business, the US subsidiary being largely catering to defense or catering to defense as well. In India also we hear a lot about defense. I'm not sure that out of the existing Indian business, are there supplies going to defense, and what part of the business is actually to defense? But my question is that do you hope, as a management, that the technology that you have in US, in the US subsidiary, can that be used here, and can a part of defense business also be catered to by here in India? If it's not already done, or if it's a small part of the business.
So we are catering here to defense also. And we are definitely using all the knowledge available in the company to grow product line in India also. But defense requirements are very, very special. It is very different in the US and very different in India. So sometimes you cannot possibly use the same product that is being used in the US in India also. So it's very, very different. All our stuff from Russia. US is, manufacturing. We don't have much of, all the submarines, all your stuff mainly in India comes from Europe and Russia. In the case of US, everything is American only. So, a lot of different in their specification, our specification, completely different.
Okay.
Yeah.
Fair enough. Thank you very much.
Thank you.
Thank you. The next question is from the line of Prakash Prabhakar, an individual investor. Please go ahead.
Hi, good afternoon. Thank you very much. First of all, congratulations on that wonderful set of numbers for the quarter. And
thank you.
Much of what I wanted to ask is largely answered in the previous question. My observation was that like the US numbers are obviously not in line. If the US numbers were good, then the overall numbers would have looked absolutely even more fantastic.
Yes.
So and obviously I'm sure the management must be working on it. Particularly with regard to, what I took away from the response that you gave in the last question is that these are mostly project kind of inventory that you have. So which means they are specific products made for specific customers, and as you said that these are all long-term relationships, so you can't really go and drop the boat over there. But just out of curiosity, wanted to know, have you ever done a management accounting on these products that you manufacture for people in the defense sector to understand how much more profitable these customers are? That is the first question. and especially in view of the long inventory carrying costs that you may be incurring?
Right.
The second question is that do you have, you must be doing the financial accounting, which is there as a part of the thing, but I was just wondering if you've done, when was the last management accounting that you did on these products and these customers? And the second question that I wanted to ask is, do you have a sectoral focus on your customers in the US, or is it, is it a defense sector? Do you have a sectoral focus? Because it seems that, like in India, where you have a sectoral focus over here, there is the CNGs.
No. In the US also we have a sectorial focus. So only thing is that now these defense, if you're saying customers, we have had a accountability on these customers. Now this is a question that Sanjeev, do you have anything to add?
The question which you raised was whether on a management side we understand that these project-based orders which we receive are obviously more profitable. So once the sale gets recorded, the results would be visible.
Yeah.
Just that some time has elapsed. That's why it's giving us a distorted picture.
Right. And the management accounting does justify, the profitability does justify the
Absolutely.
Perfect.
Yeah.
Perfect. Thank you very much. Thanks.
Thank you.
Thank you. The next question is from the line of Sarvesh Budani, an individual investor. Please go ahead.
Yes, sir. Hi. Sir, I had a short question on this, on the capacities we have. So is there any way we can outsource it, say, when we have a little capacity constraint over the next 2-3 years?
Not really. No. This is a very specialized product and a safety product. So a lot of regulatory framework comes in, manufacturing this product plus customer approvals. So, for example, a customer like Tata Motors will not just buy a product from anybody, unless the facility is approved, and the facility, a lot of audits and things like that have to go, because again, this is a safety product. So there is a lot of, we have a lot of restrictions and constraints of outsourcing the product from anywhere.
Sir, and you mentioned in India, our product, the RM inflation is a complete pass-through. So what is the situation in other geographies like USA, Hungary, Dubai? Can we pass it on there as well?
Yes, you can pass it on there also. Only thing is that, again, like for example, the US business is only on order-based business. So in case, if you take an order and then, the delivery is laid over a long time, maybe you may not be able to pass it on. So it all depends. If you got some defense orders and the deliveries are over 3 years, and then the steel prices suddenly start jumping and you are not procured the material, definitely I don't know whether it's possible to pass it on or not.
So you mean there is no RM pass-through clause in those projects, in those orders that we have?
It all depends. It all depends on the project, on the order base. So in India, because we are more on the current orders. But again, anything long term usually is very difficult to pass on. For us.
Okay, sir. And in India, have we taken any price hike, or do we plan to take any price hike?
So we are working on a price hike with the customers, on the passing on the steel prices to them. So this is a continuous process, and it always moves in a specific manner, and it has happened in the past also, and we're doing that. That is not an issue.
Okay, sir. And sir, would there be any way to share the operating cash flow number for the 9 months on the standalone or consolidated, or both, if you can?
Yeah, Sanjeev, can we share that?
What do you specifically need, sir?
No, just the operating cash flow number for the 9 months of financial year 21.
For 21?
Yes.
What we have already... no, you can specifically call us up separately and we can understand what your desire.
Okay, sir. Thank you.
Thank you. The next question is from the line of Pashpa Vora from Anand Automobiles. Please go ahead.
Congratulations for the good set of numbers, sir.
Thank you, sir. Thank you.
So in Q3, it was shown that you are trying to increase the plant capacity. So at which plant the capacity will be increased, or it will be divided in several plants?
No. See, our capacity today, in India, we are trying to increase capacity in both the plants.
Okay.
So I'm trying to basically debottle the process, wherever I can, wherever the opportunity arises where we can, debottle. And, today another challenge is that, even if you buy equipment, especially, any equipment that is coming from another country, how do you install it? How do you commission it? So a lot of challenges have come up now, due to this COVID situation.
Yes.
So we are trying to, so that is the initiative in both the plants we are taking, to debottle the wherever in the process we can. So, this is a continuous process that we are trying to, increase capacity in both the plants.
Okay. And other thing is that, what about the Aurangabad plant?
Aurangabad, we don't. No, we are not, at this moment, we are not considering the Aurangabad plant.
Okay. Thank you.
Thank you.
Nothing else.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for their closing comments.
Thank you everyone for being present.
Thank you.
Thank you all. Yeah, thank you.
Ladies and gentlemen, on behalf of Everest Kanto Cylinder